Hello everyone, this is Przemysław Radomski, CFA, talking to you on November 30th. And in today's analysis, I'm going to show you what happened on junior mining stocks on the general stock market and what's happening in the USD index. I'm going to also show you what's happening right now at the moment of recording this video in gold and silver markets because it's also very, very informative. Starting with juniors, as you can see on the chart, the situation now is very similar to what we saw earlier this year. And well, I already marked it with red rectangles and now additionally with orange ellipses. At least that was my attempt at an orange ellipsis. And what you see is not only similarity in terms of, well, rapidness of a decline and the small consolidation and then another failed rally, which was just invalidated, the attempt to move above the previous highs. These were invalidated. It's not only in case of the RSI, which moved close to the 70, but more importantly, it's also similarity in case of volume. So at first, juniors rallied on strong volume, and then the volume waned as, basically the buying power continued to dry up. It seems that the rally is over now as, the resistance, the upper border of the flag pattern was reached. The previous top was reached, the 38.2% Fibonacci retracement based on the entire 2022 decline, based on this decline. The red lines are Fibonacci retracements, and we just moved back to the 38.2% Fibonacci retracement level. It all indicates that the top is in, and that decline can now be resumed. But in today's globalized economy and interconnected financial markets, no market moves on its own. Definitely not junior miners. And the latter are particularly strongly connected with the general stock market. And stocks, we see something similar in stocks. We see analogies to even more previous cases that I marked with the red rectangles. The volume declines while stocks continue to rally. RSI is moving above 60. Basically, in all three cases where we saw something previously, where volume dropped as low eventually, or even lower, these were major medium-term tops. So the odds are that what we're seeing right now is a top, a double top actually. There were two attempts to rally above the 38.2% Fibonacci retracement, but both failed. Even more importantly, the second one was slightly above the previous high, and it was also invalidated. I mean, the breakout above this high was invalidated. This is a very bearish combination of factors, and it doesn't bode well for prices of mining stocks. Now, if you look at the USD index, you see something just as interesting. Again, 38.2% Fibonacci retracement, something that is characterized, a correction to this retracement is characterized by strong moves because that's a relatively small correction. Technically, even if we saw a decline to 61.8% retracement, so to 99 or so, technically that would still remain to be an uptrend. I mean, this entire rally that started in 2021. All we see now is correction and not a significant one. In addition to bottoming very close to this retracement, the USD index bottomed close to its previous price extremes, previous lows, previous highs. And the RSI was very close to 30, which is a classic buy signal for the USD index. Okay, and as correlation between the US dollar index and gold is very negative right now, It's minus 0.95 and minus 1 is the absolute minimum that this linear correlation coefficient can get. If dollar rallies, gold is likely to decline. And that's exactly what I think is likely right now. The similar situation to what we see right now is what we saw basically in mid-2021. The correlation was as low for several weeks. However, and RSI was also low for some time. And well, this marked bottom in the USD index, top in gold, a broader topping action in gold. And also we right now see a broadening topping action in gold right now. So this is unlikely to be a start of a major upswing. It's likely to be the end of a corrective upswing. And speaking of right now, let's take a look at what's happening. And also before we do that, please know that based on this similarity to mid-2021, gold initially declined, then it moved back, not to the previous highs, but almost. And so if gold moved a bit higher now, it would be in perfect tune with this analogy. And what's happening to gold right now? Gold rallied in today's pre-market trading. Right now is above 1760. But what you also can see is that silver rallied quite substantially. And on a short-term basis, on a very short-term basis, it performs much stronger than gold. If you compare how much gold rallied relative to its previous highs, well, it moved slightly above them. However, somewhat above them. However, silver, rallied above them and then rallied by just as much. That's not what happened in gold. When silver outperforms gold on a very short-term basis, it's a good indication that we're about to see a move in the opposite direction, which means down. Again, as I said, while analyzing the link between gold and the USD index, I said that gold could move a bit higher based on the analogy to mid-2021, and then it could, and thus form the full topping pattern. Consequently, what we see in today's pre-market trading is, it shouldn't be taken at its face value. It's a move higher, yes, but it's most likely just part of a broader topping pattern, similar to what we saw in mid-2021. All in all, the outlook remains bearish as far as the precious metals market is concerned. It remains bullish for the USD index. Also, let's keep in mind that it's the turn of the month and gold and USD index tends to reverse at those times. And the most recent move was the downside, so we can expect a rally in the USD index also when looking at it from this angle. And also, while I still have your attention, I would like to show you a little sneak peek of what's heading our way, the major upgrade in the way in which I'm providing analysis, in which we're interacting. Previously, it was just the letters to the editor section. And now it's going to be much more interactive, where you can comment and reply to other comments, and you can like a given article or a given comment. You'll probably see that still online when you join the platform. You will get a link to the platform from us shortly, most likely tomorrow, so on Thursday, December 1st. And, there's much more than just that, but the ability to interact with the authors and other people live is probably the most important feature. There are webinars, there are smaller rooms. There's possibility to provide you with chat rooms. I'm not sure if I'm going to use it personally, but I prefer comments to be posted in this way. However, other authors might choose to do so. There will probably be courses and many other goodies. But again, this is not an instructional video. I just want to give you a small heads up to show you that changes are coming and that you're going to get an invitation link from us if you're on our mailing list very, very soon, most likely tomorrow. Yeah, that's what I wanted to share with you, this good news. And so likewise, on the market, things are much better. Things are likely headed our way, and the profits that we gained this year so far are likely to be increased in the following weeks. And as far as platform is concerned, and the way in which we interact is likely to be very much improved in the very near future. So great times ahead. Thank you for watching, and be sure to like and subscribe the video. Subscribe to our channel and like the video. Thank you. Bye-bye.